What's up, guys? This is Hagrid and Max from Because Bitcoin, and today we're going to be talking to you guys about options trading and how you can take your trading game to the next level with options.
Here's an option setup that I think Tucker and I, at the time, were both looking at and actually played to a degree. So, right now, we have QQQ pulled up, and we recognize on the chart how significant of a level that 334.42 level is. That's the August 2022 high, and that level, give or take, has served as resistance for quite some time. Now, if price is able to get up to that level and actually break through 334, there's nothing but air all the way up to 371, if not slightly higher. So basically, at this point, there's two schools of thought. We're well below, we're kind of in the middle area. We want to wait for a prime spot. Now, the reason you want to wait for such a premier and prime and precise spot for options is because there's so much time sensitivity attached to them. You could be correct on the direction of a stock or an index, but you could still lose a lot of money by not purchasing the correct contract. So when you're uncertain that a move is about to happen, you should wait because the timing is almost more important than the direction at times. So let's roll the chart forward a little bit and let's see what happens as we approach that August 2022 high. Price is chugging along, very nice. Of course, again, hindsight's 2020. We already know what happened, but
Yeah.
it will serve as a nice example. So price is coiling and we break through. Let's pause the chart right there. So we break through. Now, school of thought for me is let's see if price can hold this level. If we can move up a little bit more, maybe we deviate below that line and then reclaim it. Then I would be considering longs up to our next level. There's a lot of gaps there. There's not a lot of resistance above head. And the next level that I think would be achievable could be 371. So let's roll the chart forward just a little bit more and see if we can get a low time frame trigger. Okay, there it is right there. So little deviation below, a failed dip back into or underneath that 334 level. Now, at this point, Tucker, let's discuss what options would potentially be viable. So we know that our price target would be 371.
So what I'm thinking here is okay, we broke out. This is your trigger right here because if I roll it forward just a couple more, there we go. See, this candle was your trigger to buy calls. So, and a call obviously is just me expecting price to go higher. So, see, here's the thing. I'm not gonna buy 371 or 372 options, right? Especially if we're sitting at from this candle, we're at 340. I'd probably buy 355s, 350s, usually somewhere between like at least on an index, like 3 to 5% out of the money is usually kind of a sweet spot for myself. So if I'm expecting 370 in the next 2 months, I'm gonna buy the 350s for 4 months out. Ideally, you're in the money, but far before expiration, probably halfway before expiration, you're in the money, right? So if I buy the 350s or the 355s rather, and we get up in here and my expiration is here, I'm deep in the money and we hit that 370, like that's a great trade for me. So
I'm looking at this move and we're going to enter QQQ at 340. Um, First question I ask myself is, okay, how long do I think it's going to take to get to my price target of 370? I would look at this chart and say it should happen within a couple months. So ideally, very similarly to Tucker, I'd want to basically double that. I'd want to give myself twice the amount of time that I think it's going to take for us to get there, because at the very tail end, the amount that you have to pay, or the decay, the theta decay specifically, to go into the Greeks a little bit, which is a little bit more advanced to take note to those. But theta is sort of the beginner Greek that everybody should understand, is that's basically the price that you have to continue to pay to keep your option open. As we get towards the tail end of those contracts, it becomes more expensive and you have to pay more to keep them open. So in order to avoid as much of the theta decay as possible, give yourself ample time. So again, we're going to probably pick a strike price that is probably about halfway between where our entry is and where our TP is, or target price, and then give ourselves twice as much time as we need ideally. Now let's head over and we'll take a look at the options chain. And again, this happened in hindsight. So we're going to roll over here and we're going to type in QQQ up top. So here's QQQ, and now on Robinhood, after you type in your ticker, QQQ, which is again what we're looking at, we would go over to this button right here, Trade QQQ Options. And now, again, this is in hindsight, so we're just going to go over what the chain would look like. So we identified earlier that we're entering at about a price of 340 with a price target of 370. So we want to buy a strike price that's somewhere in between our entry and our target price. So we decided on the 350s. So let's go down here, and we would have clicked on then 350. And you can see all this information about it. You can see the size of the bid, you can see the sizes of the ask, you can see all the highs, the previous close, the low, implied volatility, open interest. Now, open interest is something that should be considered as well. You want to make sure that there's actually people trading the contracts that you're in. If there's not enough demand from the market participants to trade the contract that you're on, you're going to see huge spreads between the bid and the ask. So the price of a contract could be $10. The bid could be $10. The ask could be 11, because there's just simply not enough open interest and participation on that contract. And if so, then check the one below it or above it and just find one with higher open interest. Okay, this one has open interest of 0, for example.
Oh, Max, what is the bid and the ask?
Oh, what is the bid and the ask? The bid is the price that the market right now is willing to pay for a contract, and the ask is the current price that the market is willing to sell those contracts at. So typically a way to get filled quickly is just pay them the ask. You'll get filled immediately. But if you want to be a little bit more particular about your fills, then you would probably join the bid, and then somebody on the other side that's on the ask would basically have to make a concession and say, all right, I'll take a slight discount. I'll lower my price. I'll fill their bid. So, anyways, what we would do to get filled here, again, we'll just play the 350s. We're just kind of doing a pretend here. We could basically just come here. We click on the 350, see all the stats that we want. If everything looks good, we could basically click here. And here's the price per contract. So this is the 350 call. Again, we're betting it's going to go up, and you can see everything you want about here. Okay, so then you click continue. So you click on the option. We're going to play the 350 call. Right now, they're trading at $20 per contract. Now, again, we're doing this in hindsight. These are already deep in the money, all right, because price is at 370. But anyways, you click continue, and then you put in how many you want. Let's just say we wanted 10. All right, so the cost would be $20,000 to purchase 10 of these contracts. Each one of the contracts represents 100 shares of QQQ. And basically, the most we could lose on it if we were to put in 20,000, again, would be $20,000. If price went completely against us, again, in this scenario, buying 20 contracts of the QQQ 350s, we'd be risking $20,000. Now, this is the most important part. We're going to go over to an options profit calculator. There's dozens of them online. I happen to like this one. It's optionsprofitcalculator.com. It's very, very simple. Now, before I do any options trading, I always come over here because options are very complex and you can do a lot of the math in your head, but it's very nice to have a visual attached to it. So we're going to click long call. We're going to come down here. We're going to enter our symbol, QQQ. Get price. And let's just, we'll redo it, right? So the trade that we were taking with Tucker, and here, I'll go back to the screen. Tucker, could you rewind? Yeah, right there. That's perfect. So that's where we're going to take the trade at 340, targeting 370. So if we wanted to purchase an option, we'd come here. We're going to play the 350. It's 28.82 per contract right now. But again, at the time, it wouldn't have been. We click on that, type in how many contracts we want. Each one represents 100 shares. And again, you can only, with naked options, you can only lose the principal balance that you are using to purchase these contracts. So in this case, it would be 28,800. 525. The price of the QQQ 350 calls was $12.50 per contract. So now, again, we're doing this. It's already happened. We already know what happened. The trade ended up being a winner, but we're going to study what happened. So we're going to go over here, and it's $12.50 per option. Let's just say we wanted to buy 10 of them. Calculate it automatically inputs a range for you, but we'll broaden it a little bit. So we'll put like the stock price range down to 320, and then our TP is going to be 371. So we'll just go to like 380, a little bit above, so you can see what would happen if we overshoot it and undershoot it. Now, what's great about this is that actually it will show you in real time percentages. So these are all percentages right here. So if we, let's just say at the end of July, if the price of QQQ is at 360, we would be up 44.6% or $5,500 at the end of July. But you can see how price needs to continue chugging along and moving higher because you're paying to keep the position open. In this scenario that we took this trade from 340, let's roll the chart forward now and see what these contracts would have been worth from the time of entry on that break of 340 to a full TP on the first cross of 370.
So clearly, right, QQQ continued higher. This was our entry about 1250. I just marked it out generally. These contracts from 1250 ran to 32 bucks at the peak, right? You know, we're getting a lower low in price. Percentage wise, I would venture that this is a much lower low percentage wise than the chart just because of the theta decay taken into account. But yeah, what did you think, Max?
Yeah, so the percentage move from 340 to 370, let's take a measured move there on just on the QQQ chart.
Yeah, 340 to 370 is 9.2%.
So if you just put, if you put $10,000 into QQQ, you would have made, what, $900, give or take. Now, if you were to play options and you were able to take this trade that we outlined here from 340 up to 370, it looks like you would have bought in these options at 12, give or take, and the full TP would have happened at $30, give or take. So you would have basically made over 100%. So you could make 9% versus 100%. And I know it's not that simple, of course. There's a lot more timing and risk that goes into it, but if you can time a move correctly, you can deploy less capital. And in this instance, you could have basically deployed 1/10 of the capital that you would have just bought spot QQQ with and put them into options and basically made, again, if you were doing 1-for-1, you could have made 10 times the return you would have just by buying spot QQQ. Or you could have used 1/10 of the size that you would have invested in QQQ to risk in your options play. And if it worked out, you would have made the same amount putting 10 times that into QQQ. My name is Max, and I'm also here with Tucker, CFO of Because Bitcoin, and this was our naked options trading brief tutorial. We will definitely have more of these coming out as options trading is in high demand, and once figured out can be an extremely useful lifelong skill. So guys, if you enjoyed the video, if you learned something, please consider liking and subscribing to the channel. We are a young business. We very much appreciate your continued support. We work very hard to pump out these videos on a daily and a weekly basis. So guys, I hope the video was of value. Thank you and take care.
Thanks, guys.